Well, good evening and welcome to the lecture today. So today I'm going to introduce you to another interesting topic in taxation. The topic that we are going to do is now we are going to introduce what we call income tax. So I'm going to introduce income tax to you, and then I think we can call it a night. Right. So just allow me to share the screen so that we can dive into the training. Okay, so we should have this one here. All right. Great stuff. Great stuff, great stuff, great stuff, great stuff, great stuff. Okay, so let's get into it. Let's get into it. Let's get into it. Let's dive into class. Okay, so first things first, taxation is a very interesting subject. And when you're learning tax, don't learn it for the sake of passing that exam. I think this applies to everything that you do in school. When you're learning, don't learn for the sake of passing exams. I think it's a concept that I disagree with. When I was in school, I went back to school when I was still working in quite a very busy environment. Despite it being the case, I think my objective was not to read and study for the sake of the exam. And for a few people that I would study with, my colleagues in school, when I'm leading a discussion, I'll actually tell them to say, guys, we need to understand these things. Because, when you understand something, you're able to apply it regardless the scenario that an examiner may bring a question in. So when you understand the concept, when you understand the principles, you are able to apply them at different phases of life. So equally yourself, you might be a distant student studying at whatever university. Don't just look at that 50%, okay? Look beyond that. Again, this concept of saying, no, as a mature, it's only 50 plus 1. I disagree with that, okay? Let's not settle for less, okay? Let's set the bar high, and we might just land in the 70s. So that is something that I actually wanted that to actually echo. And then for those that are in their third year at the University of Zambia, get in touch with me, and I'm going to run you through this lecture, this course. So when you're at the University of Zambia, they are quite a number of courses that you're going to do in your third year. And one of the courses that you're going to do is taxation, and you're going to do financial reporting. So please get in touch with me. I'll run you through financial reporting. Not too sure if my good Dr. Yohani is going to be the one taking you through financial reporting. If he's going to be the one, then kudos, I'm going to run you through because he taught me financial reporting. And I'm not too sure if Mr. Machila Arnold is the one that's going to take you taxation. If he's the one that is taking you in taxation, well, I'm going to run you through his tricks and all the secrets that he shared with us at the time that we were studying with him. All right. So for those that are doing third year, please get in touch with me. You're just starting with your registrations. I'm very much aware of what is happening at the University of Zambia right now. Those that are at CBU and you've got taxation, I know CBU is just opening. I'm not too sure at what level taxation is. Please get in touch with me. Those that are different universities and you've got this particular course, please get in touch with me. Those that are doing 2.4 CA, I know you will be writing exams, I think, in the next 2 weeks. So for those that are starting, say, writing their exams in March, get in touch with me and I'm going to help you pass that exam. Taxation is not a subject that you should write twice. And I'll repeat that tax is not a subject that you should write twice. Tax is a subject to write and clear at once because it's basically principles. Understand the rules, apply the rules, you pass the exam, and you're able to advise other people with regard to tax matters. Okay, so let's dive into this lecture without wasting much of your time. All right. I'm trying to put it in presentation mode. I hope I manage. All right. There we go. So today's lecture is Introduction to Income Tax. I did introduce tax as a subject, and now we are going to introduce income tax. All right. I did give you my name. So what are the objectives for this lecture this evening? All right, so number one, we are going to look at taxable and exempt income and gains. So we'll look at what income is taxable and what income is not taxable. And then we'll move on to look at taxable and exempt persons. So there are people that are taxable and there are people that are not subject to income tax. So we are going to unpack that. We're going to learn who these people are. Then we're going to learn some concepts that are very pertinent to this course. So whatever subject that you have to, you are going to do, there are certain terminologies that you must understand. If you don't understand these terminologies, it will be very difficult for you to apply yourself to a scenario when given by an examiner. So some of the terminologies that we are going to look at is residence. Okay, we are going to discover who is a resident for tax purposes. Then what does ordinary residence mean? Okay, and then we are going to discover and we're going to learn a concept called domicility or a domicile, who's domicile to a particular country. And then we're also now going to see their implication with regard to taxation. Then lastly, I'm going to look at comprehensive computation of income tax payable by individuals. So this will be a very, very, very brief course. Okay, let me just take a call and continue. Apologies. I need to attend to my wife. Apologies for that. I needed to attend to my wife. You know, local government is very, very important, and you need to make sure that the local government is happy. When the local government is happy, the masses are happy as well. We, the central government, have no powers to these local governments that we have. So please take care of your wives. Whenever they are calling, can you please attend to them because local government, all right, thank you so much. Let's proceed. So that's what we're going to look at, and we'll do some computation. So I use the word comprehensive, but don't be cheated. The examples that I'm going to give are basic in this particular lecture. But there will be a time that we are going to use very complex scenarios, which are going to incorporate different tax laws, and we are going to apply those different tax laws to, to calculate the income tax payable by either an individual, a company, or a partnership. That's if a partnership does pay taxes. But I think I can preempt this. A partnership does not pay taxation, but the individual partners do pay taxes. All right. So let's proceed. Let's proceed. All right. Just push it a bit there. Great stuff. All right. Income tax. So we're going to look at income and income tax. So the first thing is, let's define what income is. So income, these are resources that persons get from business, employment, savings, and investments. As simple as that. Keep it brief and simple. Don't complicate things. All right. So income are basically resources that individuals get or persons get from a business, employment, savings, and investments. That is income. The income tax, this is a tax that is levied on the income that persons earn from employment, business, and investments. All right. So now a levy that is, or a tax that is levied on the income that you get from your employment, from your investments, and other savings is referred to as a tax. All right. Now, I want you to understand certain terms that we're going to be using, and I think I made mention to this when I just started the lecture. So we are saying income tax is only charged on the income of persons resident and ordinarily resident in Zambia. Income tax is only charged to people or individuals that are resident and ordinarily resident in the Republic of Zambia. All right, so now we are referring to persons. So the term persons refers to natural persons and persons other than individuals such as companies. So a person other than an individual is a company. So when you're talking about persons, we can talk about a natural person like myself, yourself, and then we can also talk about natural persons like Virtuous Tax Corporate Services, all right? Or we can talk about a person that is not an individual, for example, Zesco. So Zesco is a person other than an individual, all right? So tax purposes, we're going to refer to them as individuals other than an individual, or we're going to refer to them as persons. So that is the first terminology that you have to acquaint yourself with. Then let's now try to look at what is called resident. So determination of resident. So a person who is a resident person, what is residence, okay? So the term residence applies to both individuals and persons other than individuals. So I defined who persons other than individuals are. So we are saying the Income Tax Act states to establish the residence status of an individual or other person. So the income tax gives us that guidance. If you want to be a very good tax consultant, please acquaint yourself with the Income Tax Acts. And then those are the things that will actually acquaint you at this. All right. So individual. So for an individual to be resident in Zambia, what does the Income Tax Act says? An individual is resident in Zambia if they are physically present in Zambia for a period not exceeding, for a period not less than 183 days in the charge year. A person or an individual is resident in Zambia if they are physically present in Zambia for a period not less than 183 days in the charge year. So we are saying if an individual is presently available in Zambia for a period not less than 183 days, then that person is said to have been a resident of the Republic of Zambia. So if someone comes from Angola and comes to Zambia and they stay in Zambia for a period not less than 183, for that particular charge year, that individual is going to be or is said to be resident in Zambia. I hope that's clear, and I've explained it as bluntly and clear as it is. All right, so now I've used the term charge year. What is a charge year? A charge year is the term used to describe a tax year, a fiscal tax year. So in accounting, we call it an accounting year, all right? in taxation, it is called a charge year or a tax year. So in Zambia, the tax year runs from 1st January to 31st December. So that's the tax year for the Republic of Zambia. Now let's look at persons other than individuals. So persons other than individuals are companies. So for a company, how do you determine their residence? So a company is resident in Zambia if it meets the following criteria. Number one, the company is incorporated in the Republic of Zambia. So if a company is incorporated in the Republic of Zambia, that company is resident to Zambia and therefore liable to income tax. The place of effective management of the company is in Zambia. So the income tax goes further to guide us. What does effective management of a company mean? What does it mean? They are saying a place of effective management is a place where decisions are made, a place where the board of directors are based. Okay, so key individuals of a company, if those key individuals of a company are based in the Republic of Zambia, the executive committee of a company is based in Zambia, and decisions or the head office of that particular company is in the Republic of Zambia, and this company was also incorporated in the Republic of Zambia, then we can say this company is resident for tax purposes. Clear? Good. All right. So ordinary residence. When we talk about ordinary residence, what do you mean? So the first residence that we talked about, you've seen there's a certain criteria that must be met for you to be called your resident. But when you're ordinary, when you're an ordinary resident, ordinarily resident in Zambia, this means these are persons who live in Zambia. The persons who live in Zambia are resident and ordinarily resident in Zambia. I was born, grew up, and I live in the Republic of Zambia. As such, I'm an ordinary citizen. I'm ordinarily resident for the purposes of taxation. Note that individuals who come to Zambia with the intention to stay in Zambia are said to be resident and ordinary resident in Zambia from the date of arrival. If an individual comes from a different country and they intend to stay in Zambia for forever, for example, they say, no, we've come to Zambia to stay. That person becomes resident to Zambia and ordinarily resident to Zambia from the date of arrival. So that is the guidance that we get from the Income Tax Act. Let's now look at the concept called domicile. Domicile. All right. I want you to understand. It's a very short course. Let's hope I'm not fast, but I think I'm fast. But the thing is, I'm very clear. I know I'm clear and I've explained well and you're able to follow. All right. So now let's look at the domicility. What does this concept mean? Domicile. So this concept relates to a place which an individual refers to as the permanent home. So someone is domiciled to a country that they refer to as their permanent home. So a person is domiciled in the country that is their permanent home. So there are two types, and these types are called domicile of origin or domicile of choice. Domicile of origin or domicile of choice. What does this mean? So domicile of origin. So domicile of origin is the domicile acquired at birth. So Kelvin Kapotwe was born in Mansa in the Republic of Zambia. By virtue of him being born in Zambia, he is domiciled to Zambia by origin. If Kelvin Kapoto was born in Angola, and when he attains the age of 16, decides to come and stay in Zambia as a citizen, then that is going to be called domicile of choice. That's the difference. Domicile of choice, this is the domicile that is acquired by choice. So I'm going to acquire domicility by choice only when I turn the age of 16 years. Then I can decide to say, okay, I think I need to be domiciled in Zambia. That's if I wasn't born in the Republic of Zambia. So individuals are able to make a choice as to what country their permanent home once they only attain the age of 16. The concept of domicile may affect the amount of income that will be assessed on a taxable individual, where such an individual has income from all over the world. So this concept of domicility actually has implications, or the implications that it has with regard to taxation is that it affects the amount that will be subjected to taxation on the income that comes from all over the world. Okay. Individuals who are domiciled in Zambia would be liable to Zambian income tax on their worldwide income, whether the foreign income is remitted to Zambia or not. Unless the income is specifically exempt from income tax, then it will not be assessed. However, the worldwide income may not be taxed if it is deemed to be deemed to be not of a Zambian source. So if it is deemed not to be of a Zambian source, then that income may not be taxable. So a lot of professional judgment, a lot of judgment is going to be used. I think a lot of cases may be used to try and assess whether this income as Zambian sources. All right, I hope I'm clear and you are following this lecture about income tax, and you've understood the terms that I've used and some of the principles that we have discussed. Now, let's look at exempt persons. So there are certain people that are exempt from taxation. Those people that are exempt from taxation, and there are people that pay tax. So Income Tax Act has prescribed certain individuals to be exempt from tax. Below are the persons that are exempt from paying taxes in the Republic of Zambia. So in this country where we stay, there are people that are not subjected to pay taxes on certain incomes that they earn. All right. The first person is the person not resident in Zambia. So if a person is not resident in the Republic of Zambia, they are not liable to the income tax. They are not liable to income tax. That's the first one. The Republican president, Mr. Hakainde Hichilema at president. The Republican president is exempt from paying income tax on the income received as president. That is the point that you should remember. The only income that is exempt, or Mr. Hakainde Hichilema, or the Republican president is only exempt from, is an exempt person from the income that is earned from for holding a purpose, or for holding that office of a Republican president. Just for holding that office, Mr. Hakainde Hichilema is exempt from income tax. However, Mr. President is liable to income tax on income that comes from other sources, all right? So the income that comes from his businesses, the income that comes from other investments are subject to income tax. So he's going to pay tax on that particular income, not the emoluments that he gets from the government. I hope I've made that clear. Then chiefs. Chiefs in the Republic of Zambia are not taxable on the income that they receive from the Republic of Zambia or the income that they receive from the government. However, they are also subject to taxation on income that is earned from other sources such as businesses, investments, and businesses and investments. So the income that they earn from businesses and investments will be taxed accordingly. But the income that they earn from the government, the income that they receive from the government, they are not taxed. So if a chief does not own a business and they don't have investments, the only income they have is that of being a chief, then that chief is said to be exempt. Same as the president. If a president doesn't have any other income, the only income they have is the emolument from holding the office of the president, then the president becomes exempt from tax. All right. The other ones are local authorities. Local authorities do not pay taxes. By law, they are exempt from paying taxes. Then approved pension funds. So approved pension funds do not pay taxes. They are exempt individuals. All right. So they must be approved by the Minister of Finance. And Commissioner General must also look into vet this approval. So they must be approved by the Ministry of Finance as approved funds, and as such, they will be exempt from taxation. Commonwealth Development Corporations also are organizations that are exempt from paying taxation in Zambia. Clubs, societies, or associations organized and operated only for social welfare or recreation improvement, golf clubs. Okay, so a golf club does not pay taxes. It is exempt from taxes. Rotary clubs are exempt from taxation, etc. Such clubs that are organizing for recreational purposes, for social welfare, those clubs and associations, societies do not actually pay taxes. They are exempt from taxation. Registered trade unions, Zufiao, okay, do not pay taxes. ZNUT, when my father was a teacher, and he had those t-shirts, and at some point I remember they would call us, well, now for about to pay and then back pay, and then now for about that Zanuti, yeah. So ZNUT does not pay tax. It's exempt from taxes. Ofiao is exempt from tax, and all other registered trade union. The key thing to note is it must be a registered trade union. Okay. Political parties registered as a statutory society under the Society Act. So a political party that is registered with the Society Pact, the society that is registered under the Society Act is exempt from tax. That's an exempt person. Then other persons are listed in Part 3 of the second schedule of the Income Tax Act. So you can go to Part 3 of the second schedule of the income tax, and you see other persons that are exempt from tax. And then lastly, we are saying persons receiving social cash transfers. So those that are receiving social cash transfers are not taxable or are exempt from paying taxes. I hope that is very clear and you followed what I was talking about, and you're able to explain these things. So what we are doing is we are building on some very critical principles that we'll be discussing as we go with the course. So as I build on these principles, please follow me closely because they are very important. If you are to understand taxation, you make sure that the foundation is solid and you understand the terminologies and you understand who is exempt, you understand what income is not taxed, and then that will be a bonus for you. Exempt income. So we've talked about persons that are exempt from taxation, and then let's look at exempt income. What income is exempt from income tax? So not all income is subject to taxation. Some incomes are exempt. Below are the examples: scholarships and bursary payments for education and maintenance during education. For those that are in universities and they're getting scholarships, they are getting bursaries, those payments that you get as are not subject to income tax. They are exempt. All right, they are exempt from income tax. Excuse me. The second one is emolument of the Republican president received as a result of holding office. I think I believe at this point when I was talking about exempt persons. Emoluments of the Republican president received from holding that office is not a taxable income, and as such, you don't subject it to income tax. Then emoluments of chiefs from government. So the emoluments that chiefs do receive from the Republic of Zambia or from the government, that those emoluments are not subject to income tax. Then war disability pension. So if you are in the military, you're a police officer, you went out for war, and then you come disabled and the government pays you a pension as a result of that disability, that pension that you receive from that you receive from the government is not taxable. It is exempt for tax purposes. Grants received as a compensation for loss of office or disturbance by an officer admitted to the permanent and pensionable establishment of the government. So if the government, if you receive a grant as a compensation for loss of office, okay, or disturbance of an officer admitted on permanent and pensionable basis from the government, then that grant is not taxable income and it is exempt from tax. Then income received in conjunction with the award of military, police, fire brigade, or as an old age pension paid out of public funds or benefit paid under any law in respect of injury or disease suffered in employment, that income also is not taxable on you. It is exempt income. So these are some of the incomes that are exempt from taxation. This is just a brief list, exempt from income tax. We are going to also look at other incomes that you may receive, especially when we start talking about employment income. When you start talking about taxation of employment income, there is a whole list of incomes that are also exempt from tax that you may receive from your employer. There are certain incomes like, for example, gratuity. Gratuity is not taxable. It is exempt. So there are other incomes that we are going to look at and going to discuss when we get to taxation of employment income. So those are the things that I wanted to share with you. And I'm going to now look at introduction to tax computation by individuals. So we are only going to talk about individuals, and the individuals I'm going to refer to here is not persons other than individuals. We are going to talk about individuals, natural persons, myself, yourself. All right, introduction to tax computations by natural persons like yourself and myself. So I'm going to do two simple examples just to give you some flavor on how taxes are, are computed, and so that you can just feel nice. It's okay, yeah, I learned taxation, I know how to tax, I know how to compute this particular tax. Yay! So that's what we are going to look at. And as I read these questions, these are very basic questions, and I'm saying this. They are very basic questions, but they are building blocks to more complex questions that you may face. 2 pages of a scenario is coming, and then we're going to deal with it. Okay, so I'm promising you 2 pages of a scenario is coming, and we're going to deal with it. Just pay me. Pay me, I'm going to deliver. I don't play. So let's do this. All right. So we are saying an individual's income arising in a given tax year is aggregated at the total taxable income for the year. And the total is taxable income for the year. Sorry for that, I think that is a type. So an individual income arising in a given year is aggregated. So if, for example, you've got different sources of income, 99 jobs, and then you also have farming, you also have employment income, ideally, by law, these incomes must be aggregated and subjected to income tax, okay, at the end of the year. Income tax rates applicable in a particular charge year is then applied to arrive at the income tax payable. So every year, the Minister of Finance do announce tax rates that are applicable for a particular charge year. So for this year, 2023, and these questions are based on 2023. I'm not going to talk about 2024, but I think for those that I'll be lecturing for the purpose of the exams and next year, those that are writing exams next year, I'm going to be using the budget for next year that was presented by the Minister of Finance. I think a month ago, the Minister of Finance did present a budget where he gave guidance in terms of the tax bands that will be applicable next year. So for this year, the tax bands applicable are the ones that I'm going to use in this example. All right. I must also mention that some incomes are not taxed at the end of the year because they are taxed at source. Okay, some incomes are taxed at source. For example, there's a tax called withholding tax. So withholding tax is a tax that is a tax on income at source. All right, rental income at some point used to be withheld. So I'll give you consultants' fees. All right, consultants' income. The withholding tax on consultants' income is actually consultants' income is based on withholding tax system. So the person that is receiving a service, before they pay, the person that rendered a service needs to withhold a particular percentage and remit to ZRA. So such incomes that are taxed at source are not assessed or are not taxable again at the end of the year. I'll show you how you do it. You are actually going to list them as you compute the income tax payable. You're going to list them somewhere. So I'll show you when we get to those complicated scenarios. All right. So for the tax year 2023, this year, the income bands applicable are as follows. So corporate tax is at 35%, and then for corporations in the farming sector, in the agriculture sector, their corporate tax is at 10%, all right? Obviously, there are some incentives that you get, especially when you come to talk about company income tax. We are going to look at other incentives that you can get to, to pay a lesser rate or to apply a lesser rate, for example. But those are the standard rates that are applicable. And then for individuals, these are the rates. So we've got income bands. So for those that are earning 1 ungwe to 57,600 in a year, the first 57,600 in a year is taxed at 0%. Okay, so it's not free, it's taxed at 0%. Don't say it's tax-free. When you see that 0, don't say it's tax-free. When you say 57,600 is tax-free in calculation. If I give you an assignment and then you tell me to say no, the reason why we, for example, if you give me, say, tax is nil, and then I ask you for the reason, and then you tell me because the first 57,600 is tax-free, I'll mark you wrong, because that is a wrong answer. It's not tax-free, it's taxed at 0%. That's what you're supposed to say. So the first 57,600 in a year is taxed at 0%. The second, and then from 57,600 to 86,000 to 81,600, that income, those that fall in that bracket, the first 57,600 is taxed at 0%, and then the next 24,000 is taxed at 20%. All right. Then if you reach up to 106,800, if you're in between 81601 to 106,800, then the first 57,600 is taxed at 0%. The next 24 is taxed at 20%, and the next or third 25,200 is taxed at 30%. Then the excess that you get is what is taxed at 37.5%. I hope that is clear. I know it's not clear, but it will be clear when I do a computation for you. And then you are going to understand, so, oh, okay, this is what it means. Some guidance here. The rate of income tax on income from farming is 10%. So this means that the excess of the farming profit above 57,600 for the tax year 2023 will be taxed at only 10%. What do we mean? Or what do I mean? All right, so if the only income you have is farming income, if the only income you have is farming income, the first 57,600 will be free. We are going to less it, all right? The first 57,600 is not free, will be taxed at 0%. So we'll remove it from there. And then the excess, if it's only farming income, then the excess you get is going to be taxed at 10%. I think I've corrected my mistake there. 10%, all right? It's going to be taxed at 10%. But if your income is not from farming, then those bans are going to apply until we exhaust everything. All right, so let's look at an example. And the example we're going to look at is example number 1. Mr. Jaden M. Kapotwe has business profits of 450,000 kwacha for the charge year 2023. The turnover of the business in the tax year 2023 was 950,000 kwacha. Required. Calculate the income tax payable by Mr. Jaden M. Kapotwe for the tax year 2023. So, there's a reason certain things are mentioned here. So the question is, we've got two things that have been mentioned in this question. The first one is the business profit of 450,000. Then the question gives us a turnover of 950. Which one are we going to use to calculate tax? And why is it that the question is giving us 950 and it is also giving us 450? For what purpose? For what benefit are these figures given to us? All right, so the explanation is this, colleague, and get this. Your accounting profits, the profits that you calculate in financial accounting, the profits sitting in your financial reports, those profits are not the ones used to calculate taxes. Those profits are adjusted. And when you adjust, what you get is what we refer to as the business taxable profits or business profits. So you don't charge taxation on accounting profits. You charge taxation on taxable business profits. So you are going to make adjustments. I'll come and give you the full details when we start looking at taxation of business profits. I'll give you the principles. I'll give you the reasons why we need to adjust them. For those that have watched that have gone on my LinkedIn page, I think there's a time I did an article on business profits and why we adjust them. You can read that, but I think I'll give you more context when we get to that topic. Then why is there 950,000 kwacha there? It's a turnover, all right? So the turnover actually gives us guidance as to what tax we are going to use to charge a particular person. So if the turnover was below 800,000, then we are not going to charge Jaden M. Kapotwe, or we are not going to use income tax on Mr. Kapotwe. No, what we are going to do is we are going to subject is revenue to what we call turnover tax, and we're not going to use business profits, where we are going to use the turnover, because turnover tax is on the turnover of the business. But the turnover that we've been given in this question actually is guiding us to say Mr. Kapotwe actually exceeds a turnover of 800,000 that has been prescribed by the Income Tax Act, and as such is liable for income tax, and we're going to use the income tax method to calculate the taxes payable to the tax authorities. I think I've explained why those numbers are there and which number we are going to use for tax purposes. All right. So let's calculate quickly. Let's calculate quickly. Allow me to open up an Excel and calculate this quickly. All right. All right, so this is what we go. This is how you write it. All right. So we are going to calculate the Jaden M Kapotwe. Then we say income tax payable for the charge year or tax year, 2023 or tax year 2023. I like doing that. So another thing that I want to employ you colleagues is that as accountants, we are very neat people, very neat. As such, our presentations should be neat as well. Don't be, don't behave like you are not a professional. So accountants, we are professional people, and as such, we are very neat. So we are going to remove the K there to denote kwacha, and I'm going to just center it there. All right. So we are told to say, the business profit. So this means this has been adjusted for us. The business profit is 450,000 kwacha. All right. And then what we are going to, where we are told is the first, so income tax computation now. So I don't want to use the method of no lessing, because I told you that you tax that 57,600, you tax it at 0%. So I told you again that you need to be neat. So I'm going to be neat. All right. So we are saying first, we are saying the first 57,600 first 7,600 is gonna be taxed at 0%. 0%. So we are saying tax there is 0. Then next, $24,000 is going to be taxed at 20%. And then, so we are saying the tax there is 4,800. And then we're also saying the next 25,200 is going to be taxed at 30%. We are going to say that times 30, that's 7,560. Then we are going to say the balance. We are going to say the balance of all right. So now let's get the calculator and work this out. So this is how it works out, right? So you are going to get the 450,000, remove 57,600 minus, because that one is at 0%. So remove it, remove 57,600. What you're remaining with is 392,400. In this 392,400, you are going to remove the 24,000 and tax it at 20, which gives us 4,800 there. All right. Again, you're going to remove the 25,200, tax it at 30, which will give us 7,500. So minus 24,000. So I'll remain with 368. When I remove the other 25,200, I'll remain with 340, 343, 200. So the balance, when I take out all these things, the balance that I'm going to remain with is 343, 200. And this is the one that suffers the biggest rate. And we are going to say the balance times 37.5, and then tax payable at the last band is that. So now we can say income tax payable. We are going to say the income tax payable. Let me just remove this. I put it here. Okay, no. Income tax payable. The income tax payable is a summation of these. All right, and then what we can do is we can try, like I said, accountants are very smart people. We want to do things systematically. Let me remove that comma there and just say, I put that, I'll remove the zeros. I don't want them there. I don't want them there. Oops. All right. Don't want the zeros. Okay. All right. And then I'm going to do this. I'm going to underline that. As well as that one there. Okay. And then maybe what I'm going to do is I'm going to hide this row. I'll say hide. Okay. Then I'm going to highlight this and make it bold. All right. And what I would do, these also, I'm going to do that. And then I do that. All right. And then, yes, I think. All right. So that's how you calculate the income tax payable. So from 450,000, this man is going to pay 141,060 kwacha to the state. So this type of calculating tax, if you remember from the introductory lesson that we had, this is called the progressive taxation way. So this is a progressive tax. the higher you earn, the more tax you pay. So your tax is relative to your income. Okay, that's why you've seen the balance there, 346. It has bumped his taxation. So for example, ngale pelafe palia pali band ya 25 200, then there you see that it is not going to be the case. All right, so now that is how you calculate income tax. Let's look at another question fast, and then we are going to call it a night. Let's also look at another question. Then we are going to call it a night. So I've given you a calculation there. All right, so the second example number 2. Miss Professori runs a farm on a commercial basis in the southern province of Zambia. So the annual turnover from her business has always exceeded 800,000 kwacha. Farming profit for the tax year 2023 were 560,000 kwacha. She has no other income. She has no other source of income. Required. Calculate the income tax payable by Miss Professori for the tax year 2023. So just like I explained in the first example, some numbers there are there to just give us an idea of what type of a rate we are going to apply. So we are told that this is a farming business. And I mentioned to say a farming business, the corporate or the rate that is applicable to any farming business in Zambia is 10%. 2, the question has told us to say this particular person doesn't have any other source of income. There's a reason why the question has mentioned that, so that we don't use the tax bands in calculating this in calculating income tax. Number 3, there's a reason why the question has told us that Miss Professori's turnover exceeds 800,000, so that we can apply income tax to this question. All right, again, there's a reason why we've been given 2 numbers, the turnover and 560, which is a business profit, so that we can calculate tax not on turnover, but on the 560. In an event that the question told us that Miss Professori's turnover doesn't exceed 800,000 kwacha, then we would have not used the 560, would have used the 800,000 as the turnover, and would have not taxed Miss Professori using the income tax method, but would have used the turnover tax method. I've belabored this point. So even as we progress, keep that in mind. All right. Calculate the income tax paid by Miss Professori for the tax year 2023. Let's calculate. Let's go back to our working, and I'm going to copy that. Then I'll just say, I'll put it there, just for us to move quickly. I'm going to put it there. All right. No, sorry, not there. I'm going to put it there. Great stuff. All right. So now here we are dealing with Miss Professori. So we put the name there, Miss Professori, Miss Professori. All right. So Miss Professori, income tax payable for the tax year 2023. So we are told that a business profit, we are told that Miss Professori's business profit, we take out the K there, center it. Okay, let's center it. Right. Then we are told that the business profits of Miss Professori is 560,000. So we are saying a business profits. All right. And then now let's do the tax computation. Tax, let's do the income tax, computation. And then I'm going to highlight it as usual, because I believe accountants are orderly. This is how we present. Not to present your work in a certain way so that even the person that is reading is able to follow. All right? At least that's what I was taught. So, Miss Professori doesn't have any other income, but remember, he's an individual running farming profit. So the first 57,600 is going to be taxed at 0%. So this tells me that that times 0. We get a 0. So here we're not going to go down with those other things. Remember, it's farming profit. So we're going to say the balance will be taxed at 10%. As easy as drinking water. So let's get the balance. How do you get the balance? It's 560. It's actually do this, that minus that. That is the balance we get there. All right, and then that balance which we get, we're going to say multiply by 10%. Okay, multiply by 10%. Okay. So life is that easy in tax, guys. It's that easy. And we, yep. So, for Miss Professori, we are going to say income tax payable. Income tax payable is equal to a summation of these two. All right, and then we are gonna close this. We're gonna close that. All right. Okay, and then I'm gonna make this bold. All right. I'll make this bold, and then we are gonna do this because we love order. Okay, and then I don't want those to my 0.00. So I'm gonna do this, and I don't want these ones. I'm gonna do this. If you're better in Excel than me, please come and teach me. I think I'm trying. All right. So that is how you calculate income tax, basic income taxation. I hope you get the principle and you're able to apply in those complex scenarios that we may have. So if you're doing 3.4, that is advanced taxation now. So these are some of the scenarios, and then they ask you to say, okay, advise which way or which route this particular person should take for the purpose of taxation. Should he be an employee? Or should he be in farming? Or should he do trading, or should he go for farming? So in this case, you are going to answer for yourself which one is better for tax purposes, whether you go in farming or you are going to go in your trading or in employment. So those that are in employment are actually paying more taxes than those that are in farming, because they're applying 10% on their income. And if it's a very big business, you actually do some adjustments that actually give you some more relief. So this is what we are going to be dealing with. So for you that are at UNZA, when you're at the University of Zambia, I know your tax. I know the syllabus, so it's more or less 2.4. But what Mr. Machila has done is been clever about it, and is incorporated 3.4 as well, so that you learn how to calculate, and then you also need to give tax advice. So it's a combination of two courses. So he has combined 2.4 and 3.4 to make one tax course, so that you give advice, you also compute taxes. For those that are doing CA, SCCA, CIMA, I think according to the Zambian setup, the way the Zambian tax is, the way that Zika sets up this exam is that you are going to do 2.4. So 2.4 basically introduces you to taxation. It introduces you to the calculation or computation of taxes, so that you can be a well-vested tax accountant. Then further, you're gonna practice at you're going to specialize in a route called the public practice route, where you're going to specialize in taxation and auditing. So you do advanced audit and assurance, you do some public sector audits, and integrated tax or advanced taxation. So the advanced taxation requires you now to be a tax consultant. So you do both computations, and then you need to give advice. So that is all about today's lecture. I hope this lecture has been helpful to you. I hope you've learned something. But what I'm asking from you after giving you this lecture, so these lectures are free of charge. I'm not charging anyone. So what I'm doing is, I want to give you a scope of what you expect from me. Do I understand the subject? Am I vested in this subject? Maybe those are some of the concerns that you might have. Is this person able to give me what I need when I pay him money? Oh yes, so it's up to you to judge for yourself. I think I've done my best to try and make things simple for you to understand. So give me a call. Give me a call on 0770. No, so don't give me a call on that number. Just WhatsApp. Send me a WhatsApp on 0770 127790. Send me that WhatsApp, and I'm gonna add you to a class. So my class for taxation is starting on the 3rd of December. I'm going to introduce the subject, and then the scope of the subject is that we're going to do the full syllabus for taxation. So for you that are in universities, you're going to give me your course outline. For UNZA, I know the course outline. You don't need to give me the course outline for the University of Zambia. I know the course outline for the University of Zambia. For other universities, give me the course outline. Let me look at it, and then I'm going to tailor my lectures according to your course outline. For Zika, CA, you don't need to give me your course outline. You have to start the whole syllabus. For Zika, those that are doing CA, you don't need to give me the course outline. I know the course outline. You have to do the entire syllabus for you guys. That's why I'm charging you more than I'm charging the university students. Thank you so much, Kelvin, and see you next time in another lecture.